Dear listeners, welcome to Mark's Morning Call. Real time, real markets.
Good morning, all. So you'll remember in the airline sector review that we did, I ended by saying that I was pretty keen on British Airways and didn't go into great detail in terms of why. So what I thought I'd do is just do a supplemental follow-up to that. And also, in addition to kind of explaining why, what I want to do is to also kind of show a format for the way I think that you should present any investment case. Number one, we're going to say, why do we like British Airways? What is the investment thesis? There's four main things that I like about British Airways. Number one is that it's in a business that's got long-term secular growth, both in terms of appetite for tourism and also in terms of business travel. Number two, they hold a significant position in three of the world's major aviation markets. So not all of them, but three: Europe, the transatlantic, and Latin America. Number three, because of the changes that have been made at British Airways, they now have a strong operating profit margin of between 12 and 15%. And on the back of that, they then generate significant amounts of cash flow, which then brings me to my fourth reason, is that they have a very strong focus on shareholders' return, always looking to give money back to the shareholders whenever they have excess cash. In terms of the current operating performance, then they produced results to the end of June 2025, which showed the revenues were up 8%. The operating profit went up by 43.5%, which, if you remember our discussion about operating gearing in airlines, then that's what we would expect, i.e. a smaller increase in revenue leads to a much, much larger increase in the operating profit. So what of the future? Well, if we look at what analysts are saying about British Airways, there's about 20 analysts follow British Airways. The median, or the average expectation for profit, is an increase from 1,309 billion to 1,446 billion in the following 6 months. And so they're expecting a continuation of the growth that we saw in the previous 6 months. In terms of management, then, per their latest report, they're seeing continued strength in the premium market. And again, if you remember from the sector review, then what we said is that that's where a lot of the money is made. People paying very high prices for first and business, and then much less in economy class. And what they also indicated is for the second half of the year, they've already got 57% booked. And so if you remember that what we're looking for an airline was about 65% utilization in order to break even, aiming for kind of 85% to make a serious amount of money. If I then look at the valuations, in terms of its historic profit, the airline is trading at 7 times earnings, and based upon the expectation of growth in profit to next year, that drops to 6.6 times. If I compare that in Europe with Ryanair, then Ryanair is trading on 13 times, almost twice as expensive. And compared to the US carriers, Delta Air, American Airlines, then both of those are trading on 10, 11 times. So on a relative basis, then British Airways looks pretty cheap. And based upon my expectation of performance, both in terms of management representations and analyst forecasts, then I expect British Airways to perform just as well as any of their competitors. Finally, in terms of risks, i.e. why I might be wrong, then there are some things that one needs to think about and take into account. Number one would be a slowing of the economies in Europe. So Europe is very significant, 30% of total activity for British Airways. That's then repeated on the transatlantic route. And so any disruptions in travel as a result of any US policies under Trump, both tariffs and other, could obviously have a material impact on British Airways. The last one is the oil price. We talked about the oil price and its significance in the sector piece. Obviously, any significant uptick in the price of oil 30% of their operating costs would have a material impact. But also note that that's going to be something that's a problem further down the track, because as we also noted in the sector piece, British Airways hedge 80% of their oil. And so as a result, we wouldn't expect any material impact of that for at least a year. So overall, I would conclude that British Airways, on a balance between valuation and expectations, is for me quite a strong buy.
That's all for today. Lastly, the legal note. This podcast is for informational purposes only and does not constitute financial advice. Views are our own. Do your own research and seek professional advice. Investing involves risk, and past performance is not a guarantee of future results.